It doesn't matter who you are, what type of investor you are, what expert level you are at, you will always ask yourself, what is a fair value for this stock? Now, there are statistical indicators that show good entry points, like the RSI. There are indicators that will show you whether the stock overall is bearish or bullish. There's a lot of complicated stuff out there. It's kind of hard to decipher. What I want to show you is a simple way. When you see a stock that is worth $50, is it worth that? And that's what this video is all about. All right, now that I have your attention, if you like videos like this and you want to see more, make sure to hit that subscribe button. We got a lot of good content coming out. And if you learned anything, I mean anything, in this video, do me a favor, help me out with those YouTube gods and click that like button. That is hard to say, but not hard to do. All right, now this video is all about finding a fair price point for a specific stock. Now, everyone in the world wants a good bargain. That is why Black Friday is what it is. It is human nature to want to find the best deal as possible. If you ask anyone, no one wants to overpay. So when you see a $50 stock, this is how you figure out whether it's worth it or not. And that is the gram number. Now, this number has nothing to do with this guy or that guy, but it has everything to do with that guy. Oh, and kind of that guy. Now, the gram number is the fastest and easiest way to figure out whether stock ABC that is currently being listed for $50 is worth it or not. Now, this formula was created by Benjamin Graham, who is considered one of the greatest investors of all time, and actually is one of Warren Buffett's mentors. Now, the gram number formulation is this. Now, it looks complicated, but is actually insanely simple. And this is how he came up with that. Now, again, if you want to buy the book, feel free. I'll leave a link in the description. But what is laid out in this book is that the current share price should not be more than 15 times the average yearly earnings. The book also states that the current share price should not be more than 1.5 times the book value per share, or the BVPS. That is hard to say really quickly. Now, the 15 times the 1.5 equals this portion of the formulation. And that is essentially the technical breakdown of this exact formula. Now, before we get into actually calculating a specific stock's gram number, I'm gonna go over some pros and cons of this. Now, the first pro of the gram number is how easy it is. It can be calculated on any calculator, any spreadsheet. You can do it on a piece of paper. It is super quick. Now, the next pro is that you can identify discounted stocks. You can quickly see which stocks are under its current value. Now, here are some cons. Now, the first con that I'm gonna go over is that this is a very conservative approach, which, if that is your trading style, this might be perfect for you. Now, the second con is that this only works when a company has a positive earnings per share and a positive book value per share. Now, one could argue that if the company's not making money, what is it really worth? Now, there are a lot of companies out there that have never churned a profit yet. There's a lot of companies that you're essentially betting on the future of this company. So if you have a negative EPS or negative BVPS, you cannot use the gram number, because essentially, according to this number, it's not worth anything. All right, now the third and final con is that it oversimplifies everything. Now, this could be a pro or a con. Now, I would not recommend only relying on this number when deciding whether to invest in a stock or not. There are a lot of other factors you should consider, but this is a super quick way to see a value. All right, now let's calculate a gram number. All right, now for this example, I'm gonna go over Bank of America, or BAC, which is its stock ticker. All right, so when you go to the calculator, you're gonna do 22.5 times. Now, the first number that we're gonna look at is the EPS, the trailing 12 months. So here we go. If you're on Webull, it is right in the middle, and that is 3.5. I'm just gonna round up to 1. So let's times this by 3.51. Then we got that number. And then the next one is the book value per share, which is right under that number if you're working with Webull. And that's 29.7. So we're gonna times that by 29.7. And then it gets a crazy high number, but there's one more final step, and that is you're gonna find the square root of this. So you're gonna click the square root, and then boom. The gram number is $48.43. So if we go to Webull, and you see the current list price is $31.79. Now, currently Bank of America is being sold way below their gram number, which would indicate that this stock currently on the market is being undervalued and would equal a good buy opportunity. So the next time you get asked, or you ask yourself, what is a quick and simple way to find out the fair value for a specific stock? You look up the gram number. All right, that is it. That is all I have for today's video. Now, I hope you learned something. Hopefully you got a lot of value out of this video. And if you have any questions on anything that I said, you can either hit me up in the email in the description or just drop a comment. I will get to everything. And again, thank you so much for watching. I really appreciate it. And if you made it this far, definitely hit that subscribe button. And then I'll see you in the next one. Peace.